The auto business is changing along with the rest of the world. Every day, new technologies are developed. None, though, can compare to EV technology, which Tony Seba, a Tesla bull, claims will completely transform the car business. I want to talk about the next 20 years, but first I want to take you back to 1900 New York City to give you some background. For thousands of years, horses served as our primary mode of transportation. This image shows one car in a sea of horses. There is one horse in that photo, 13 years later, amidst a sea of automobiles. Every Tesla investor will be shocked to learn what Tony Seba just disclosed about the unconscionable speed of EV disruption. Renowned futurist and technology researcher, Seba thinks that electric cars will dominate the transportation industry in the future. He recently offered some thoughts on how electric vehicles, EVs, will permanently alter the automotive landscape. He believes that the world is not prepared for what is to come. The topic of today's film is electric cars and how they're changing driving habits and the automotive industry's future. There is much to be learned from Tony Seba's forecasts, ranging from lifespan to autonomy. Prepare to be amazed and fasten your seatbelt. According to Seba, the next 15 to 20 years will be the most disruptive in history. It's not just disruption, it's what I refer to as phase change disruption. And I'll explain what that implies to you. New energy vehicles, which include plug-in hybrids and electric cars, accounted for 39% of new car sales in September, up from just 2% in the previous year. Thus, everything is moving swiftly. Even within the industry, some people believe it might reach 80% by 2025 rather than simply 2030. I made the insane prediction in 2014 that it would end by 2030. Seba goes on, there will be a $5,000 car by 2030. That vehicle will most likely cost $5,000. Therefore, combustion engines will essentially be obsolete in markets with intense competition by 2030 for only economic reasons. However, it is not the primary disturbance. Essentially, the convergence of on-demand, electrified, and autonomous mobility is the main phase change disruptor. Consider fleet-managed services like Uber, Didi, and robotaxis. Electric car demand is rising at a rate that has never been observed before. The majority of EV marketplaces worldwide demonstrate this. For example, in the first quarter of last year, mainland China saw nearly 2.4 million EV deliveries, or almost 26% of total car sales in the nation. Only 10% of Chinese automobile sales at the same period in 2021 were electric vehicles, indicating a significant increase in demand. The demand for EVs is rising significantly in both Europe and the US. Do EVs, however, represent the automobiles of the future? Could Tony Seba be correct in his assessment? Let's investigate. Welcome back to Tesla Tomorrow everyone. Tony Seba is a fervent supporter of business model innovation, technology disruption, and technological convergence. These organizational capacities, in his opinion, are essential for product innovation, which generates new markets and societies while dismantling the old ones. His point of view is supported by the anticipated rise in EV demand. A number of automakers have set high goals for producing electric vehicles in the upcoming years. Seba has pointed out that despite the widespread use of electric vehicles, not all manufacturers of internal combustion engines, IC, can make the switch to electric vehicles as quickly, particularly not in the same way as Tesla. Before we go any further, please make sure to hit the like button, subscribe, and enable post alerts if you like this kind of content, so you can be informed about all the latest news on Tesla. Numerous analysts have projected that the EV market will develop rapidly in the upcoming years, which will cause the production of ICE vehicles to fall. A few manufacturers have even declared that they won't sell ICE cars after 2028, and that by 2035 to 2040, very few will still be on the road. Tony Seba has forecast that EVs will become more affordable and superior than ICE automobiles in many aspects, similar to a number of other Tesla supporters, including Cathie Wood. Many businesses are currently attempting to embrace the EV revolution, and a few of them have built a small number of electric cars. The issue, though, is that the majority of these businesses are not equipped to remain in the EV industry over the long run. It takes more than just constructing electric automobiles to satisfy targets to manufacture electric vehicles. It is a brand new, entirely different technology. Tony Seba noted in a prior post that automakers Ford, GM, Mazda, Toyota, Volkswagen, and Jaguar are starting to acknowledge that they are unable to turn a profit on electric vehicles. To expedite the shift, they have already begun to request special treatment for green taxes. We're not arguing that these businesses can't embrace the EV revolution. All they can do is not make these automobiles in large quantities. Prior EV reports state that Mazda and Jaguar have acknowledged they are abandoning up on producing EVs for the general public. Due to poor sales of its electric vehicles in China, Volkswagen is leaving the country. Ford is reducing the pace at which it produces electric vehicles, EVs, due to excessive losses on each sale, while GM is requesting a reduction in penalties for producing an excessive amount of ICE sales between 2027 and 2030. It's that these businesses are unable to keep up. Creating a reliable and easily available charging network and lessening the environmental effects of mining minerals for electric car batteries are only two of the challenges in bringing EVs to everyone on the planet. It's interesting to note that Tesla is positioned to rule the sector and already has a firm hold on this market. The company has been in the electric vehicle, EV, sector for many years, growing its markets and sales as it advances technology and boosts income. The adoption of EVs is projected to continue its upward trajectory, which bodes well for the stocks of electric car companies, particularly Tesla. Governments elsewhere are likely to enact similar laws as more businesses explore making the transition to electric vehicles. Moving to electric vehicles, EVs, is a cost-saving strategy because oil prices have also been volatile and are probably going to increase much more in the years to come. Globally, EV sales increased to over 6.6 million vehicles in 2021 from just 3 million the year before. Demand for sustainable energy is rising, a trend sparked by laws meant to cut down on pollution from gasoline-powered vehicles. For instance, the Canadian government has mandated that by 2035, all new light-duty vehicles and passenger trucks must have zero emissions. Similar laws are also being passed by other nations. The market for electric vehicles has expanded during the last 10 years. More than ever before, people are purchasing and utilizing them. The majority of Tesla supporters think that demand and sales for the company will benefit from this trend. However, what are your thoughts? Do you share their optimistic outlook? Tell us in the comments section below. Click on the next video to view more material similar to this one. I'll see you over there. This version preserves all of the original lines while making corrections to the language and punctuation, flow, and clarity, setting the risk of declining demand. Goldman maintained its buy reading and is bullish over the long run. ARK, like Goldman, remains confident in the company's long-term delivery prospects. However, he pointed to loosening supply chains that place Tesla at the forefront of being able to drive down costs and prices to help bring electric vehicles to the mass market. Wood told Yahoo Finance that Elon's main role at Tesla right now is moving it towards an autonomous taxi platform, which I think will happen in 2024. I think he thinks it will happen next year. I think he's at focus as ever as he's been on that. Kathy is a stock market fanatic, and her firm ARK Invest has returned millions to its investors. Kathy apparently predicted that shares will be worth $4,600 by 2026. By 2025, she projected the stock price of Tesla will reach approximately $3,000. Kathy, I think it's been a bad year for the stock market, but for her the ideal time to buy is when equities are priced at a discount in the bear market territory. Do you agree with Kathy Wood's decision to increase her shareholding? Share your thoughts in the space provider below. And then watch the following video to find out Tesla's most recent endeavors. Thanks, and don't forget to hit the like button and subscribe. I'll see you in the next video. Thank you.